How we doing, everyone? Today is Thursday, the 14th of March, 2024. Just coming to you like we do each Tuesday and Thursday, where we discuss real estate notes. We go over different aspects of real estate notes, real estate note investing. Um, we go live on our fan base page. If you go to fanbase.com /investor GMR, you can follow me there. But on Tuesdays and Thursdays at 8:15 Eastern time, we go live. Also, do a recording here on Zoom, and we'll post it on our YouTube channel, Abundant Capital Group. So you can go there and watch the replay if you're not able to catch us live. But we just try to break down real estate notes in smaller pieces, smaller sections, and just walk people, through and try to answer any questions that may come up. If you go back and look on at the YouTube channel, there's a playlist for Tuesday and Thursday, like live meetings. You can go on there and watch the replay and see some of the things that we've covered up to this point. And if you have any questions, you can always make a comment on the video there, and we'll get that answered. But today, we want to kind of focus on um, the approaches. We're going to focus on the approaches that a note investor should take to investing in notes, just depending on, where you are in your life and your investing journey. If you're just starting out, if you're more advanced, what are the two approaches that you can have towards note investing? And so just really quick, what we try to do is that we offer individuals who have investment capital or retirement capital higher rates of return, more safely and securely backed by real estate. That is what we look to do and how we look to help people. So if you're someone that may have some retirement funds or investment capital sitting somewhere, maybe not doing as well as you would like it to do in terms of a return, we can help you place that money in an investment that will get you a higher rate of return more safely and securely, and it will be secured by real estate. And the primary way that we do that is showing people, real estate notes. So when it comes to the two approaches, you can be basically a passive investor when it comes to notes, or you can be a more active investor when it comes to real estate notes. Now, with notes, they're pretty much broken down into two main categories, and then they have like subcategories out of these two. But basically, you have a performing and then you have non-performing. Performing means that the person that's living in the property is making their payment on time each and every month. And this is what you would be buying. You're buying the payment stream. So you're paying today, a price today to collect these payments over a certain amount of time. And because you're paying for them now, you're paying for future payments today, you're getting it at a discount. How much of a discount? It just depends on the situation and things that are going on with the seller, the person that's living in the property. A bunch of things go into how we make offers, but we always want to purchase at a discount based on the value of the property and the um, remaining balance, because you may have 200, 300 months left on this particular loan that you're buying today. So you can be passive, a passive investor, or you can be more active. And those are pretty much the two approaches. And then you have the performing side, and then you have the non-performing side where somebody is not making the payment. So when it comes to the performing side, if you want to be, you don't really have to be as active because the loan is performing. That means that that money is coming to you now that you purchased the loan. Everything gets switched over to your company or your name, and now you're starting to receive that payment. Um, you don't really have to be as active because everything is going, as planned. You have a servicer. A lot of times when you do this, that means a third party is going to be collecting this payment on your behalf. And you just may need to stay in contact with them whenever you want to ask a question or anything like that, but they'll be sending the money directly to you. So when you want to be more of a passive investor, you want to look for these types of loans, the performing side. Because like I said, the person is paying, there's really no issue. And then underperforming, in terms of like a subcategory, is a reperforming note. So that would mean that at one time the note was non-performing, meaning the person stopped paying for whatever reason. And it could be for whatever amount of time. It could be 1 month, it could be 6 months, it could be 4 or 5 months, whatever. But whoever owned the note at the particular time was able to get the note reperforming. So in that case, again, now because it's back on track, you probably don't have to be as you can still be passive. You don't have to be as active on this, even though you may want to, obviously, you want to keep an eye on it because they've had a history of missing payments. But once you find out what that reason is, maybe it's a medical issue, maybe it was just somebody losing a job and then now they're working. Something got rectified pretty quickly, so you could feel kind of confident that that this person is gonna get back on track and continue to make the payments. And so those two sides of the performing side is where, if you just want to be a passive investor and not be too much involved in the day-to-day process, that is the types of loans that you want to look into. And just depending on how much money you have to invest, these notes are across the country. They're in all the states, so we can find something that fits your particular budget. Now, when we talk about being more of an active person, meaning that you're a little bit more involved, that's when you want to get into more of the non-performing side of things, meaning that this person hasn't made a payment for at least 90 days and has fallen behind. And we don't know exactly why. A lot of times we can maybe look through the paperwork that we receive on it and figure out, what caused this person to stop paying. A lot of things that happen. A lot of things could be temporary, and then there's other situations where it could be um, a lot longer. So you would need to be more active in that, meaning that you have to make sure that stay up on the foreclosure process. Where are you at in that? Making sure that you secure the property if it happens to be vacant. Maybe the person moved out knowing that they couldn't pay anymore. So you have to be more involved, making sure that your collateral is protected when you have a non-performing situation. Or if the person is still living in there, maybe not you directly, but a lot of times you probably want to get involved in reaching out because you are, quote unquote, the bank on this, and say, you don't want to tell them maybe it's you yourself is the one that, obviously owns, that owns the note and receiving the payments. You probably want to present yourself like somebody who works for you. Person wouldn't really know on the other end one way or the other, but they if they're speaking to like a third party representative of the company or something like that, you may be able to negotiate and work with them a little bit more when doing that. So that's just a tip. But, these are more of active activities that you would have to do if you are going to be on the non-performing side. And then also like a subcategory of non-performing is sub-performing, meaning that, within a 12-month period, a person may miss 1 or 2 payments and then make them up 2 months later, 3 months later. Make a half payment 1 month and then make a payment and a half 2 months later to kind of catch up. So there's some spotty history, but that they are making payments and they haven't technically gotten into the category of where you need to foreclose or start the foreclosure process. But that, not every month you may not get the same payment like you would on the performing side. And when we look at subperforming, there's a chance that that loan could go into that non-performing status. So that's why you want to, be someone that wants to be a little bit more active in the business when you're buying possibly a sub-performing note, meaning that, maybe, within a 12-month period, you may have collected all, or maybe one payment is missing, and you're still happy with the return that you're getting because you're buying this at a discount. And the person who's selling it to you is experienced the same thing with this particular person. Maybe for the first 2, 3 years, 4 years of them collecting payments, everything was okay. And then now, maybe over the last 2 years or something like that, the person's been a little bit more spotty in paying. But at the end of the day, they have made, all of the payments, or very close to all of the payments, and you can see a pattern of them catching back up. So when you look at that number at the end of the year and take all the payments that are paid within the 12-month period, and you compare it to what you put out in terms of your investment, if you're getting a solid return, you're happy with it. And again, because you are a little bit more active, if anything, goes wrong, or if this person goes into that non-performing status, you can stay up on it, and make sure that things are taken care of. So, those are the two approaches when you come into this. You just have to know where you are. A lot of people that come into notes are, they work. They have 9 to 5 jobs, they have families, they have things like that. So they don't want to necessarily be involved as much. And that's kind of where we can help people and get them to the right situation, and get them over to the right servicing company, so they can, take care of getting the payment. And then now, your money is just out working while you're working, so to speak. So, if you feel like that and you want to be that way, that, be that type of person, you can do that. Also, you can create notes on the passive side by lending. The same money that you would take to possibly buy a note to receive um, those monthly payments, you can create a note by, loaning someone some money, or having an investment on a property, attaching, a lien to the property in the form of a note and some type of security agreement, and that person is then going to pay you back. So you can create your own note as well and be passive. So you know that this money is just going to come in each month. Now, just depending on what happens, things, person stops paying or whatever the case may be, then you have to obviously be a little bit more active. But a lot of times, these things are set up in a way, and if they're written correctly, you won't have those types of issues, and you may not necessarily, the money may not be lent out for an extensive amount of time, 10, 20 years, something like that. It may be more short term. Maybe it's like 3 to 5 years or something like that, or 12 to 18 months. So it's on a shorter time frame where you can get the money back. So that's another way where you can be a little bit more passive when it comes to notes, and that's creating your own notes. So, we just want to, like I said, try to break this thing down little by little, give people things to think about. If you watch this on a replay, think about what it is that you would potentially want to do, because everybody, who's working, you want to try and get your money out working as well. Whether you do things in the stock market, whether you do cryptocurrency, or you want to get involved in some form of real estate, you should, try to always have the money working for you. So that's why we're trying to, get this message out to people, get them thinking this way, and then hopefully they could take advantage of the opportunity that's in the market right now. And if you don't feel like you have a lot of money, reach out to me. Let's talk. Let's have a conversation, because, maybe you don't have, a lot of money, but that doesn't mean we can't maybe partner you in a deal with someone else. A lot of times that could happen, where you can partner with someone brings a certain amount, you bring a certain amount, you're getting a certain return for the amount that you bring, they're getting a certain return for the amount that they have, and it works out for all parties involved. So, we just have to try and take advantage of these opportunities that are in the market right now. And there's a lot of things, there's inventory coming. Uh, if you go back and look at some of these old replays I talk about, where Fannie Mae is selling off a lot of their non-performing notes. And what happens is they sell them to larger companies. Those larger companies, a lot of times, do not want the lower price band assets, something under 100,000 or $125,000 property value. They really don't want to deal with that stuff, because it costs the same amount to foreclose on $100,000 house that it does on a $4 million house. So what would you rather spend your time, dealing with? So they package up some of the stuff that they don't want and, can be taken advantage of by, smaller investors. And there's a lot of good opportunity there, as well on the performing side as well, not just on the non-performing side. So, it's a great time to learn notes. Again, and also you may have, a nest egg, maybe you do have $50,000, in an account where you'd like to, see it get a higher rate of return. You can again create a note and attach a lien to a property, so someone can go out there, use that money to do a project, whether it be a fix and flip project. Maybe they're creating home ownership for someone else, with that money, to be able to buy a deal to create home ownership for somebody else. So, and you're still protected, with this, with the note and the security agreement. You're protected. Your monetary, investment is protected against the property. So, definitely want people to think about it. Wherever you are in your investing journey or whatever amount of money you have, if you have any questions about it, just reach out. Let's have a conversation, and see if, we could take, smaller amounts of money and just help them grow. That's what we want to do for people. We want to, help them grow it faster, more safely. And then once you do maybe a couple of smaller deals and they pan out, then you can then go on and take advantage of a larger, type of situation. So, but think about those two approaches, where you would want to be involved. Are you somebody that really wants to learn this a little bit more? Maybe you want to be a little bit more active and stay engaged in the process to kind of learn. And then some people want to be disengaged and just want to make sure that, on the 1st or the 15th, that money is coming into their account and they see their money growing that way. So it all depends on, your personality and what it is that, you want to do and your financial goals and where you're at in your life. So, think about those two approaches. And again, if you have any questions, you can email me at investorgmr@yahoo.com. You can text or call me at 973-475-8488. We did have a deal, that came across our desk. I'll just go through it really quickly. It wasn't really a good deal. Let's see here. Oh, let me go share the screen. Share. And then where was it? Over here, yeah. That. So this one was in El Paso, Texas. Marcella Santa Liana, in El Paso, Texas. It's worth about maybe 205, 210. It was a subject to deal. You can see the loan is pretty much at what the property is worth. So that, that may not be the worst thing, but that's kind of one thing that's a little bit of a red flag, is that there's, no equity in the property. Not to say that we couldn't make this a deal, but because of this particular interest rate that's on this house, 5.99%, so just about 6%, that really makes this one tough to make into a deal. Um, so there was an assignment fee. There's an agent involved. They have the property listed. They can't sell it, and along with our other, closing costs and things that go along with the, property. We were looking at about $27,000 that we needed to take down this deal, and they had 355 months. And that's, basically been in the house 5 months and now they're having problems. So, we were looking at selling this at about 210. The area says that, you probably go up to about 225, 230, somewhere in that area, but we always try to model these things conservatively. And we did it at 9.5%. We may be able to go a little bit higher, especially in this price range, in this low 200 price range. We may be able to put this at, 9.75 or even 10%. But again, for modeling purposes, um, we don't try to stress those numbers too much. So the payments here on a 9.5% interest rate are just about, just over $1,600. So, the house is affordable. But when you look at these numbers here, it really doesn't cash flow. $319.53 is not that great. And then even if there's a payoff, 8 to 10 years down the road, we're really not making any profit because the financing that we're creating, there's not a big enough gap in terms of the interest rate for one, and then we're not really building in any equity with our purchase price at the 210 or 215, something like that. So as that first loan pays down, this one doesn't, there's not a big enough gap there to make a significant amount of cash flow on this. So this one wasn't a great deal, and so we didn't want to move forward on that. But um there are a lot of deals out there that that can be done and we see on a daily basis. Where's my thing out here? So there'll be more that come out. I gotta try. Oh, stop sharing. We see things every day. Different deals come out, but that would have been a decent one. For $27,000, somebody with an IRA that has that amount of money, a lot of times we can, either do split the cash flow with you. If it was higher, obviously we could set it up that way, or we could do a fully amortize your note. The money that you would lean against the property could be fully amortized for about 3 to 5 years, somewhere in there, probably about more closer to 5 years at a really good interest rate if the deal had kind of worked out. So, again, if you know anybody that has, if you watch this and anybody that has retirement or investment capital, looking for a higher rate of return, please let me know. We will do a referral if somebody, gets referred to us and we wind up working with them. We can definitely send a referral your way because we appreciate that. But we're trying to get more people to get their money out working, especially, in this particular market that we're in and where we're going. Private money opportunities are out there. And I think right now it is good to be secured to the real estate, because worst case scenario, if the person that we have in there doesn't pay, we can get that person out and then put someone else in the property and make sure that your investment is protected. So uh, that's what we're looking for. We're looking for more partners, hopefully, that we can present these opportunities to, and they make sense to them, and then they want to move forward. So reach out. You have my contact information, and be looking forward to talking with anyone. Have a good one.